We want to bring in Tim Higgins, Wall Street Journal reporter and a CNBC contributor. In his latest column, Tim says that regardless of the strike's outcome, Elon Musk has already won. And Tim, thanks for being here. That may be a little self-descriptionary, easy to understand from all of this. Elon Musk is not dealing with unions in the same way. He doesn't have any unions.
Yeah, he's not at the table, but he's definitely, his presence is kind of looming over. It gets down to the labor costs. The UAW workers at these Detroit automakers, on average, all in is about $66 an hour. That includes benefits. At Tesla, it's estimated at $45 an hour. So from day one, when they start talking about spending more, Elon wins because Tesla is cheaper to make cars over there for those electric vehicles. And it's not just cheaper, it's also they're working to cut costs even more in the future. They've already talked about slashing manufacturing costs by like 50% for the next generation vehicle. So, the UAW would probably say it's a race to the bottom, but it is a race to make electric vehicles profitable, and Tesla is doing that, whereas the likes of Ford are not.
The Biden administration is going to get involved, Tim, and I'm trying to figure that out. It's as they always calls himself the most pro-union president in the last 50 years. So how does that, when they go in to try to mediate, how does that work? You know what it reminds me of, Tim? That I remember Corzine was the governor of New Jersey, and he was negotiating with the public unions, and he was giving a speech saying, "We're going to get you a great deal." So that's the person that was trying to protect New Jersey taxpayers' dollars from being, from giving too much, too many concessions to the public unions. He was also the governor negotiating with it. So it reminds me of the same thing. What is the Biden administration? What line will they walk in this? Are they going to twist the arms of the big three?
Well, it's definitely a challenging position for the president politically. A long self-described car guy, a labor pro. But the union president is frankly frustrated with the Biden administration, feeling like the Biden administration has been pushing these automakers towards the electrification of the automobile, putting money to incentivize that, and yet worried that the worker is going to lose out ultimately. There's estimates of maybe 40% less labor needed for electric vehicles. This isn't just a concern for Detroit. This is a concern for all automakers around the world. When you're talking about electric vehicles, it's just less complex motors and less complex building that's needed. So really, where do they sit in that new world order?
Hey, Phil, let's talk just a little bit about
Tim.
No, Phil's still here, too.
Phil? Oh, you're going to talk to Phil?
Yeah, Phil's still here, too.
We got Tim?
Around. Tim and Phil are both here.
Okay, that's confusing.
Phil, let's go through again just the idea of what happens. Gosh, now I lost my train of thought.
That's our fault.
No, what happens in a scenario? We spoke with Harry Wilson last week, and he was at the table back during the auto crisis back in 2008. And was negotiating with them to give up a lot of the things that the UAW is now trying to win back. Phil's point was that, hey, this all makes sense if they want to get much higher raises. He thought the offers from the automakers were incendiary when they started out with the offer of 7% and 8% increases, that they should be getting something closer to 30%. But all the other things, pension benefits and some of the other issues that the UAW is trying to put back in, 32-hour work week, he thought that was a no-go. Yeah. Is that sort of frame of mind something that's there? I asked if they'd called Harry to try and get him back to the table, because what he was talking about kind of made sense from the longer-term perspective of what was lost, what they should be getting, and what would be so bad that it would put the automakers out of business.
Well, the 32-hour work week is one of those that the automakers are going to fight tooth and nail, because their feeling is, look, okay, you want to talk about pay increase? Let's say you're going to increase the pay, and I'm just throwing out a random here. They ultimately settle at 25%. You want to cut the work week down by 20%? That's another 20% raise on top of that 25%. And in addition to that, you take a plant like the Kentucky truck plant for Ford. It's not going 24/7, but it's pretty darn close over the course of a week. You move that down to 32 hours a week for the workers there, they will have to hire more people in order to continue production at the rate where they are right now. And that's the most profitable plant within the Ford system. So if you are Ford, you don't want to hire more people. You're in the process of trying to become leaner and more efficient. That's the rub there when you talk about the 32-hour work week.
Hey, I don't know. Either Tim or Phil can answer this, and I'm curious if it's a function of the stock. This actually goes back to Tesla. We're talking about Tesla being the winner in all of this. For quite some time, there was a period of time, at least, where it looked like Tesla employees and those working on the factory floor were actually making more on an hourly basis than the unionized workers at GM and other places. This clearly appeared to be true 2 years ago and at least almost 1 year ago, but may not be true today and has become a talking point. Have you heard this? And I assume this is a function of the stock price of Tesla not being what it was a year and a half, 2 years ago?
You know, this is an element of the kind of the upside where traditionally, you know, the UAW wants to, in essence, kind of guarantee what they're going to be getting. They have been persuaded to go with contracts that have bonuses that are tied to the profitability of the car company. But in the past, we've seen reluctance to go with kind of stock options that are perhaps more speculative in nature. They want to be tied to the dollars and cents of the company, whereas a Tesla is more like a startup. And that's how workers at the company, from white collars to the assembly line, have largely been compensated. And that's kind of the Silicon Valley mindset.
Tim, my question, we're going to have someone that used to be at the NLRB on a little bit later. And she says you need to understand the economics of the union's proposals that they gave. In 2007, they accepted a lot of concessions to sort of pitch in. And she goes on to say, now that profits are booming, they want to share. And how long do you think profits are going to be booming? Here's the New York Times today. They were talking about Biden cracking down not on necessarily car emissions, but just the overall industrial emissions. But there's going to be all kinds of emission standards, transition to EV. Do you expect profits to continue booming for the next couple of years for the big three?
Well, that's really the question. You're kind of hitting at this idea of the cost of EVs for these companies is a real headache for these executives. And in some ways, they are funding that development from the profitability of their SUVs and their trucks. Right. And if you look at that kind of mountain of money that they're doing from those vehicles, it has to pay a lot of mouths, right? The development of EVs, but also workers.